To bring you love, you bitch. You're not worth to bring you love, you bitch. You're not worth to bring you love, you bitch.
Let the beat control your body.
highs. Some basic strategy will teach you so much about coding and identifying a lot of these systems. What do you think has caused you to not quite reach the goal that you set? Was there anything that held you back?
Yeah, I mean, probably was slightly naive and thinking I could learn how to program and then use that programming knowledge to code and a profitable strategy.
Are you separating you're separating that learning the trading and learning the coding are two totally different paths of learning?
Essentially, yeah, because I mean, to go in the algorithmic direction, you do need to have a pretty solid understanding of how to program. You also need to then identify a strategy that can be programmed, because the strategy or the type of setups that I was trading kind of earlier this year and later last year are quite difficult to program. I mean, that's one of the things I learned as well, was because those types of strategies were very visual, as things like horizontal support and resistance. Very hard, well, for me at this level, are quite hard to
identify and track a prior support level or prior swing low or swing high.
Yeah, definitely. So I mean, one of the things I have learned is that there's quite a big difference in the type of strategies that can be discretionarily and those that can be used in a quantitative, more systematic way. So, I mean, that probably one of the things is just a bit naive on how steep the actual learning curve was. I also questioned myself quite a lot over the last 6 months about whether I was doing the right thing, whether learning, Python scripting language was the right direction. But I know there's easier ways to achieve the goal of, systematic automated trading. For some reason, they just didn't really appeal to me, and Python really stood out, and I just felt like it was a more valuable skill to have in the long run. I mean, some of the other things I was considering was, obviously going back to, languages like ThinkScript, or maybe I should have been using something like TradeStation. They've also got their easy language. The cool thing about Python is it's open source. So you can use it on any platform. You're not limited in that regards. And I guess probably the other reason, which I found a bit challenging, was it kind of time constraints. Because I mean, I'm not trading full time, which means I need to try and find an income in other areas. Which means that I've still been doing the occasional graphical web design job. As much as I hate it, it's money coming in. So, I've had that. I've been running the podcast. You've also got your personal life away from the computer as well.
You have a personal life?
Yeah, there's a small one there.
Oh my God, I missed out. I forgot. Yeah. I was going to give you a hard time. I was going to say, what the hell else have you been doing with your time, Aaron? It's not like you have a podcast or anything to run.
Yeah. So one of the things I think it's good that I can identify what's been holding me back. Well, not holding me back, but what's slowed my progress a little bit. I don't know if that's even the right word, but
remember when we talked about this, I think a couple of months back, when you were deciding between the languages, you made a really good point about backtestability, that whatever strategy you're trying to code or identify or eventually employ or deploy, is our favorite word for algo trading, right? Deploy it. You had said Python and I know TradeScript is one advantage. They both have TradeStation's easy language versus ThinkScript. One advantage that Python and TradeStation have over ThinkScript is that they're backtestable. They're easy to kind of vet the strategy on the fly. Did that factor into the kind of delay?
Yeah, absolutely. I mean, because I know it would have been easier for me to maybe use something like TradeStation, but I think I try to look at things in a very big picture. I think I might have mentioned this last time. And I think in the long run, knowing an open sourced programming language that's a lot more versatile has pretty much the only limitation to it is your own creativity. is going to be more valuable in the long run. Yeah, and I mean, one of the things, I mean, I was coding earlier today for a few hours before we got on the call here, and I was, you know, just running a few back tests, and you could just see, you would, you know, obviously hit the back test button, and it would draw out the equity curve, you know, over the period that you were back testing a strategy. And some of these strategies, they just, you know, they spike up at the beginning, and then the next, you know, let's say 3 years that you're back testing, it's just going down, 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 just keeps going down. And it's just really cool to see that. And I think that is quite powerful because, you know, what I was back testing was a strategy that some people will be trading that, or some people will be trading something very similar, but they've never back tested it. They're kind of trading blind in some regards. So it was just, I think there's a lot of power in being able to see just how that performed in the past. Even if it's not going to perform exactly like that in the future, you know right then and there that that's not something you're going to continue to trade.
It's like there's 3 levels of awareness. There's the people who are like not aware at all of anything resembling an equity curve for their strategy. There's people who have an idea but haven't gotten the equity curve yet. And then there's people who have the equity curve. So being able to see it, I think that's a great point, that there are people putting this into practice who don't know their numbers, but you're seeing almost like the, you know, the fabric of the fates. You're seeing someone's life, you know, that they don't know that they're about to undertake, right? Now, obviously, not every trading record with a given strategy is going to be the same. You have to Monte Carlo it to see exactly how many different permutations there are and how many different potential paths with the same trading report. Have you gotten into Monte Carlo backtesting by chance, for anyone who's listening who might be interested in Aaron's experience with Monte Carlo?
Very little is the short answer. That's definitely something I'm keen to explore, you know, in the months going forward. I have done some basic Monte Carlo work in Python, mainly following tutorials, but you know, that's all been really helpful as well. That's definitely something I'm going to need to learn and dig into a lot more going forward though.
For anyone who's wondering, I'll give a like super cursory explanation of Monte Carlo. Imagine you had 100 trades, but you took them in a different order. So they all have the same outcome of the last 100 trades of yours that we're examining, but they came in a different order. What if all your winners came at the beginning, or all your winners came at the end? That would dramatically affect how your, you know, sort of net output at the very end of the 100 trades, you know, would come out to. Monte Carlo scrambles those trades in their order hundreds, thousands, tens of thousands of times, and gives you a kind of best and worst case scenario, so to speak.
Yeah, and I think if anyone actually wants to look at that a little bit more, Phil Lawrence.
Exactly, link them to Phil's article, yeah.
Yeah, so I'll put a link to that in the show notes. That article, I mean, many of you have probably already read it. It's called The Numbers You Wish You Knew About Your Trading. He's got a great explanation that actually hits on Monte Carlo in that, as well as some good visualizations and screenshots of tests he's done. So yeah, that'll go into that a little bit more. So what other questions have we got on the list there, Zach?
Sure. Well, one question that I think a lot of traders would want to hear about from you is, like, by nature, what type of trader are you?
Yes.
And, you know,
yeah. So the type of trading that I'm naturally attracted to, you know, probably just because that's what I was first introduced to when I got into trading, is swing trading. So that's, and when I say swing trading, holding positions anywhere from a couple days to a couple weeks. I don't really like to hold anything beyond that. I'm talking like, you know, holding for a couple months, that can get a bit boring. Not really a day trader. That doesn't really appeal to me too much. Although in saying that, my goal with, you know, moving in the algorithmic trading direction is to have strategies that operate on a number of time frames, and one of those time frames would most definitely be intraday strategies. So I'd like to layer it with, you know, a couple intraday strategies, a couple swing trading strategies, and then maybe even, you know, a couple longer term strategies as well. And I mean, that's something I picked up from speaking with Kevin Davey, I think that was episode 39. It was around about that time. And he said that having, like a basket of strategies actually helps you smooth out your equity curve over time as well. So, that was a good takeaway from that interview.
Well, it's a good point that he's making, that you can't build one strategy to solve every type of market. You need a grouping or kind of cadre and an armory of strategies to apply to a variety of markets. You don't have to apply to every single one. You don't have to have something in your basket for each type of market. You just try and cover as much ground as you can and produce a smoother equity curve, as you're saying.
Yeah, 100%.
I think you're also being a little bit modest, not to give too much away to the listeners, but, you and I have done a little bit of day trading together, actually, and Aaron's being modest. He's a pretty talented intraday trader, but what's I think really cool is that you're picking a strategy that fits with your style of kind of your personality, right? You know that you don't want to be impulsive staring at the screen for 8 hours a day. It's not going to fit with all your other obligations. You need something that's automated, more even-keeled, maybe a longer-term strategy, but not quite investing.
Exactly. Yeah. I think you hit the nail on the head.
Sure. How do you feel about progress to date, even though you haven't hit the target you're aiming for? Are you discouraged at all by this?
Well, there's definitely been times over the last 6 months where I have been pretty disappointed, but then I sort of stop and think, right? So I think back to where I very first began. So when I very first decided I was going to start learning how to code, right? I didn't even know what an integer was. I didn't know what a float was. I didn't know what a function, a method. I didn't have any idea. I look at what I'm doing, what I've been doing earlier today before we jumped on this call. And, right now at this point, I've been able to code an algorithm from scratch. Admittedly, it is fairly basic, but, it works, and it's a good starting base, something to build from there. Yeah, I've definitely been disappointed with my progress at times, but I think, everything always takes a lot longer than than you anticipate that it will. Plus, the knowledge that I've acquired from doing, 25 interviews since we last spoke, or spoke and recorded it, is huge. It definitely helps me, whether I trade like those traders or not. There's still something I can take away from everyone, and we're probably going to get into that a little bit more as we go. But yeah, overall, I think I'm okay with where I'm at. It would be nice, I'm not really actively trading at the moment. Instead of spending, a couple hours after the market closes each day looking at charts and that sort of thing, I find myself still looking at charts, at least a few times a week, but I'm usually spending a good few hours each night learning how to code and program and that sort of thing. So it's a little bit different to, I think, most people that I speak to during the week, like people who email me who listen to the show. I think it's a little bit of a different path than what many other people decide to take. And yeah, obviously I just hope I'm doing the right thing.
You realize how this relates to what other traders experience in their own trading career? They expect it to be, they set the bar so high, right? They say, all right, well, in 6 months, I'm going to have $1 million acquired from my, proprietary strategy of so-and-so and so-and-so that I'm going to enact 8 hours a day with no failure, with, absolute consistency and total risk management. On the second day, they screw something up. They go, oh my God, this is way harder than I thought. We experience failure so frequently in trading because we set the bar for success so ungodly high, right? Look, I didn't want to bark at you on the last interview and say 6 months. There's no way you're going to get a strategy up and running in 6 months. I wanted to be encouraging, but look, that's an aggressive goal for anyone, even a very seasoned coder, to go from ground level to test it and implement it that quickly. It can be done, and it can be done in a simplistic manner, but I think, like you're saying, you've learned so much from just doing the basics. It's like owning your first car. You probably learned quite a bit about how to take care of a car from that first vehicle. God rest its soul. Right?
Absolutely, yeah, totally agree.
Yeah. All right, so how are you measuring your progress? I mean, are you journaling? Do you spreadsheets? Do you document results? How deep are you into the back testing? Or is this more like you're still doing the coursework?
Yeah, so one of the things I kind of like about programming is that it's quite easy to measure your progress. Whereas you're a discretionary trader, or it's just a trader in general, some weeks you're up, some weeks you're down, and it's always up and down. And it's quite hard to know if you're actually getting better. Like, you're acquiring more knowledge, but are you actually getting better? I mean, with in a programming sense, either it works or it doesn't work. And you start to code things that are slightly more complex. Not to say I'm actually doing anything super complex right now, but things start to gather momentum, I guess, is a way to say it. A good phrase,
sorry to jump in, a good phrase from Phil that just came to mind, shells. The idea of building a shell that can be used in anyone's script, but then applied to another. I know this is more of a kind of proper programming term that I'm, of course, a non-programmer, like kind of learning myself as I'm learning code, but building a shell that you can use, a construct that you might use somewhere else, whether it's, like I said, a moving average cross or a counter of how many bars since an event has occurred. These things can be useful to systems down the road. So building a subcomponent might be valuable, even if it doesn't turn into a fully fledged, up and running, deployed system.
Absolutely. I mean, I've found that even over the last couple of weeks, like if I create something, like a new script, I'm often copying and pasting blocks from past scripts into the new one and just tweaking it a little bit to suit. And then obviously adding to that as well. So yeah, and I mean, just to add on that, I have been I've got like a personal blog. I don't really promote it and put it out there, mainly because there's not really much on it. I've probably been a little bit slack on that. When I was doing a little bit of day trading earlier this year, on demo, I should mention that, I was journaling all my trades on there with screenshots and that type of thing. So I was doing that. It's now sort of turned into a place where I just put important notes that I want to remember about programming. And then also, I'm still obviously looking at charts, quite a few times each week. And I find, the type of setups that I was looking for going back to earlier this year and into last year, I'm still saving those onto what you'd probably call like a watch list. And one of the things which I think is quite beneficial is watching those setups sort of unfold. Okay, so obviously you identify it before the trade signals, but then following it. So following it, it signals whether I take the trade or not. I mean, I've only taken a handful of trades this year. I'll still keep it on my watch list for the next sort of, month or two, just to see how it unfolds, to see how maybe I could have better, just think about how you maybe could have better managed your stops and that sort of thing. I don't think I'm being very clear here, but keeping it on your watch list to watch how it unfolds past whether you took the trade or not. Like, don't just scrap it from your watch list. Keep it on there and see how it progresses and moves. What
this is like? This is like doing homework and flipping to the back of the book and looking at the answers instead of doing the work. When you actually watch the setup, I'm serious, when you watch the setup, you're working through the problem, even if you're gonna get the answer anyway. You're gonna get the answers to the test after the test, but it's kind of like, well, I still need to learn how to think about it. I think that's so cool that you're constantly kind of giving yourself these little mini quizzes of the setups. Did I identify it right? How could I have done this better? Was I early? Was I late? Was my stop too tight? Is it too wide? Etc.
Yeah, I mean, that sort of thing, I mean, I keep them saved there, and it's going to be a big help. You know, it continues to be a big help in identifying better setups, better entries, and that sort of thing. Like, there's a lot to be learned from actually following a trade through.
You know, that website that I shared with you guys, and I hope, you know, you go check it out, twitter.com. I'm messing with you guys, obviously. I'm posting a lot of my trades on Twitter, because finding trades like that and keeping a record of them that you can go back and look and say, on this date, at this time, this was the opportunity. My God, to be able to document that and aggregate it. Are you saving any like spreadsheets or Excel output of any of the systems?
No, not at this stage. I'm probably not at the level where that would be too beneficial in regards to back testing. But
sure.
You know, hopefully in the next couple of months, I'll be starting to build up a good backlog of spreadsheets.
You know, there's a great quote I have here in my notes. I think it's from the originators of the C programming sort of suite language. Make it work, then make it right, then make it fast. Like, it's okay if you're just on the make it work part. That's what everyone starts with.
Yeah, that's actually really good. I like that, because I mean, some of the coding I've been doing, I know it's not the most efficient way. I know it's kind of a little bit rough. I mean, it's just first step. Yeah, like exactly like you said, to get it to work, and then go through and optimize it, and
then get it right,
yeah,
and then get it fast.
Absolutely.
By the way, make sure you mistakenly attribute that quote to me and not to whoever said it, so that I get credit for it. Okay?
Sure,
Zach
sure.
Hurwitz said this. I'm messing around. Yeah, I mean, what are you studying and working on at the moment? Are there any resources that you're finding helpful right now? I imagine there are so many traders out there who are like, wait, if Aaron's saying that it's doable, then you're right. It probably is doable. I should go check this out. Where should they start?
Okay, well, I mean, I can share a couple resources that have been really helpful for me in learning Python. And I'm not saying you should go out there and start learning Python, but if you want to, Codecademy has an awesome course on learning, you know, the good fundamentals of the language. It's a very extensive course. It's free, and every different sort of lesson, that's probably not the right word, topic, whatever, you have to actually write out the script. So you're not watching videos, you're not just reading a book. It's very interactive, and it actually makes you write things out before you move on. So that's been helpful. What else? There's been I've done a couple courses on Udemy. I think one of them was called the Ultimate or Python Bootcamp or something along those lines. That's a really awesome course. So I'd recommend anyone who wants to learn, you know, just the fundamentals of that language. That'll just teach you, like I said, the fundamentals of the language. It's not going to teach you how to apply it to a trading domain. But you've got to learn that to start before we can go any further. I've also been reading quite a few, you know, quantitative trading books. Inside the Black Box is a really cool book by Rishi Narang. He's actually going to be on the podcast in a couple of weeks' time, so I'm pretty excited about that.
That's awesome.
Yeah. He'll be really good. His book is really insightful.
Is that something that somebody without any experience in quantitative trading could read and appreciate? Because I remember that feeling of like, I want to buy this book, but I'm going to feel like an idiot if I buy it and look at it and go, I got to Google like half of the words in this book. Is it something that you could get into, or is it kind of over your head, but you're going to try and get more of it over time? Or
it's probably a little bit, it's probably a little bit over my head still, but I kind of just take the attitude. It kind of just feels like sometimes I'm just drinking from a fire hose. Like I'm going to take some of it in. And just the more I go over things, you know, it's kind of like when you set out to learn something new. I mean, most people can probably relate it back to when they were younger, right? They had a favorite band. When they first discovered the band, they didn't know anything about them, but you know, you kind of, you know, when you're young, you're a teeny bop, you kind of obsess over a band, right? And before you know it, in a couple of months' time, you know everything about all the band members and that sort of thing. It's very much the same. You know what I mean? You just kind of got to almost obsess over things, and you just start to learn more and more, and it just becomes almost like second nature after a while. Like the more you go over the basics, like I've done, I don't know, probably 3-4 Python courses, probably a few more than that actually. All just going over the fundamentals of the language, not even applying it to a trading sense, just learning the basics of the language. But it's been good to do it from different people because everyone has their own unique way of explaining things.
You know, one thing, if I might jump in, you're kind of hitting on the Yoda principle. This is what I call the idea that like Yoda didn't start as Yoda. Like he wasn't a wise old sage when he was born, right? I mean, he started somewhere. He had a teacher. He grew into be this incredible, teacher of other Jedi, but no one, is born with knowledge. Like you say, you start out somewhere and you go at whatever pace you can and you acquire skills, and eventually one day you can become, a 9,000-year-old or 900-year-old little green Muppet.
Absolutely.
Luke Skywalker. Right?
Yeah.
We all have dreams.
Yeah. And I mean, that's the thing is like no one's born with the knowledge on how to do anything. You know what I mean? It's just a skill that if you want to learn, you just set your mind to it and you just go out there and learn it. So you just accept that it's going to take time and just be prepared to put in the work.
I was going to say, just remember all traders started out thinking CNBC is where they're going to get finger on the pulse market knowledge, like with CNBC. Everybody believes early on, and then they get a little jaded, they get a little experienced, then they grow up a little bit, then they start searching, they go through the struggle. And those that make it through the wandering struggle are the ones who become professional traders. They, persevere.
100%. And Zach, just something I want to ask you, which I probably should have asked a little bit earlier, but you asked me about how I'm keeping track of my progress and my journaling and that sort of thing. And there was actually a few questions that came in about that subject. So I'd like to put it to you and ask you, what tips or pointers would you give to other traders who need some guidance about journaling? Like what exactly should be in a journal besides what price you bought and sold at?
I think, okay, this is a good question. Every trader journals a different way. I journal like a scrapbook. Like I put some screen caps, some text notes, maybe an audio recording of like how I feel at the end of the day. I just throw it all in a folder with that date. That's just me though, right? Some people want a Word document. Other people make a database or a spreadsheet. It depends on how quantitative or qualitative you are. For me, it's a lot of the visceral that I want to capture. I want to figure out how I felt that day, why I felt that day. Was it internal or external to the sort of trading ecosystem? Meaning, was I upset about something that happened in trading, or did I not get enough sleep the night before? Did I fight with my girlfriend? Did I kind of want to observe the behavioral triggers that might be happening around me too. There are so many other things other than just like what price you buy and sell. What was the market doing when you took the trade? Was it trending or was it a non-trending environment? Was it a big reversal day, that sort of thing? What type of trading day did it appear to be when you took the trade? Something I'm big on, numerically scoring your trades just on your own, your own personal scoring of 1 to 5. How confident were you in that trade? It's not bad if you take a 1 or 2 confidence trade, meaning low confidence. Presumably, your risk is appropriately smaller to reflect that it's like, hey, I don't think this is going to work. But if it does, then great, I'm in a wonderful trade for 8 cents of risk or some modest amount. What was your risk reward on the trade? How good was your entry? What time of day did you enter? Things like that. I think the more you trade, it's sort of like going out on dates. The more dates you go out on, the more you notice kind of commonalities. Like if the girl you're going out for a coffee date with doesn't show up for the first 20 or 30 minutes, she's like super late. Maybe that's not a good match. And for the record, for me, that would be a great match. I'm always running on Hurwitz time. Anybody who's taken me up on that free consult knows that I'm usually running 5 to 10 minutes behind. What a great, if it's 5 or 10 minutes, that's awesome. That's a success, Anyway, with journaling, I think you have to figure out what appeals to you, because journaling sucks. And we all know it. We all know it. Nobody enjoys writing, especially about their losses, right? Part of what I talk about, like the circle of good trading, the last point in the circle is to review with clarity. It's your job to keep your head held high, look straight in the eyes of your trading report and see it for what it is. Because if you're one of those people who like, and I've had days like that, I know we have all had days like this, it hits like 4:01 p.m. Eastern and I'm like force quitting thinkorswim. I'm like, get out of my face. Like, I can't be looking at you right now because the trading report is so bad for the day. Nobody wants to get there. We all want to be able to look at it, and even if we have a losing day, kind of be motivated. Well, you know what I'll do? I'll take some screenshots of the day and I'll be able to look back at what I saw when I have a clearer head. I can't tell you how transformative that is for traders. It's like holding a mirror up to themselves. They can finally see the struggles that they're experiencing. I used to do that when I was a younger kid in my teenage years. Here's a little bit of my teeny bopper teen angst therapy. And by the way, we're going to come back to that. I want to know what band you were talking about. But I used to open a TextPad file on my computer, close my eyes, and just type. Just sort of like stream of consciousness. After I was done, a couple minutes of writing, I would go back and I'd read it through and just observe my own feelings, like what I'm experiencing, but not saying, my own kind of internal monologue. And that was what helped me in journaling my own kind of thoughts and feelings and applying the same thing, like I was saying, a stream of consciousness rant. So maybe one day after, 250 episodes, we'll do for special subscribers, we'll release the unedited audio notes of Zach Hurwitz cursing at himself after a bad trading day. No, I'm just kidding. All right, now back to the important question, Aaron, because you almost glossed over this. You said you were teeny bopper and you followed a band obsessively. What band are you talking about? Because I know you're talking about a band. What is it? You
I'd probably
gotta
rather not say.
No, you have to tell us. You can't mention it and then not tell us. I'll tell you what. I'll tell you. I have a terrible one that I like too. So go ahead. You give me one, and then I'll give you one.
I'm probably going to say Good Charlotte. That was one of them.
Oh my God.
I know there's a few others.
Oh my God, Aaron.
I'm trying to think.
No, dude. Okay,
I'm trying to think of an example.
That's a great example. Thank you. That has made my night. The band I liked, prepare yourself. It was Creed.
Oh yeah, that's pretty shocking.
Did you just hear like 2,000 listeners simultaneously? Here, we're keeping with the Star Wars theme, right? It's like, I sense a disturbance in the Force. Like 1,000 voices cried out at once. It's like, seriously, people are just like, Good Charlotte and Creed. Who am I listening to on this podcast?
Yeah, it's a bad combo. So just going back to the journaling, let's quickly move off that.
Man, yeah. Come on, I couldn't skip over the band. All right, go ahead.
So on the journaling, like it's probably one thing to journal your trades and keep records of, what you've been doing, your activity. How often should someone maybe make a conscious effort to go back and review their journaling?
Do a small review every weekend, Saturday or Sunday. You don't want to do it end of Friday. Come on, nobody's got a clear mind at the end of Friday. We're all burned out, right? Small reviews. So we're talking maybe 20 or 30 minutes, and then maybe a larger review of an hour or two to review the weekly kind of notes. And remember, this doesn't have to be a regimented, detailed multi-page report. Journal the way that you're gonna journal. You know what I'm saying? Like, do what fits with your personal style. So make it enjoyable for you. Like I was mentioning, the scrapbooking. It's something I can do kind of on the fly as I think about it, as something strikes me about the day or something that I've written in chat. I can just grab that and copy and paste it. That's easier to me than writing a paragraph about each trade at the end of the day. It is going to take up a lot of time. Obviously, if you do this like every day, if you review the notes, it's something you have to add into your workflow. I don't know if daily review is really that important. I'm not trying to sound lazy here, but it really is. It's more about, I think, the weekly. One data point does not a trend make. So you're going to have terrible days. They are going to happen where everything's wrong. And, nothing's going right. The best setups don't work. You fat finger a trade and maybe buy too much of it, and then it goes against you. And you got to make it through it. Prepare yourselves, guys. Cheesy traderism incoming. If you want to be here for the good days, you got to be here for all of the days. You just have to show up and trade. You don't get to just show up on the good trading days. You have to make it through all of the difficult ones as well. But I don't think it's as beneficial to like necessarily spend a ton of time reviewing each day's notes until the end of the week. That's all.
Yeah. So, I mean, I guess that kind of just goes back to that trading mantra everyone's heard 1,000 times, is just do what, fits you. Like, find a trading approach that fits you, find a journaling approach that fits in with your schedule, and just stick to it.
You know why people react so negatively to that, though? It's because it sounds like we're talking about our like spirit animal, like our Patronus from Harry Potter. You know what I mean? Like, who is your style of trading that calls to you, Aaron Fifield? And it's not that easy. It's not like you find, oh, I belong in House Gryffindor. Like, I belong as an RSI trader. It's never going to be that simple. I think what we're saying is like, figure out what elements of trading really appeal to you. For example, I'm a very visual learner. I like pattern-based trading. That's just fun to me. It's more fun than, reading the tape, right? That doesn't mean that that's a bad strategy or that you shouldn't consider it or that it might appeal directly to you, but to each their own. And you have to find something that is intellectually fulfilling. And in the same way, hopefully, obviously, very profitable too.
Yeah, no, that's really well said, actually.
The trading Patronus part, right? The Harry Potter reference, obviously.
Of course.
Just messing around. All right, so do you mind if I keep going? Do you have? I know you've got some questions from me interspersed too.
Yeah, no, keep going. I know we've got a bunch here to get through.
I know. I gotta grill you, man. I'm sorry. This is a tough one. Are you ever worried that your work for Chat with Traders is like somehow spreading you too thin, maybe even hindering your ability to become the trader you want to be?
Yeah, and I'm glad someone actually asked this question, because it's been something I've been thinking about a little bit lately. Sometimes I think, yeah, maybe it possibly is, because it does take quite a lot of time to obviously run the podcast. Like, first of all, you've got to actually find people who qualify for an interview. Then you've actually got to get them to agree, and then you've got to lock in a time. Like, there's a lot involved before you even get to recording the interview. And then obviously it needs editing, it needs show notes, all that sort of stuff. So yeah, there's a lot of work involved, and it does take up quite a lot of time. But I am learning so much from it. And I think whether I trade directly like the traders I interview or not, there's always a few good takeaways in there for me, which I can apply to my own trading. And, they might just be something that just sticks in the back of my mind. But I mean, the time factor is something I'm aware of. And I think that's good that I am mindful of that. And one of the ways I actually plan on tackling that going into 2016 is I have a virtual assistant who I'm actually interviewing for a virtual assistant at the moment to help out with things.
That's great. And
I'm also probably bringing someone on to help out with research for the traders I interview. So that's definitely going to cut back my time quite a lot, which will allow me to spend more time on my trading. But I mean, in saying that, I am still spending 2 to 3 hours most nights on my trading, mostly learning coding and programming and quantitative methods and that sort of thing. But I mean, one of the things which I really liked from one of the interviews I've done since episode 25 was Tom Dante. I think it was episode 36, I think. He was awesome, and one of the quotes he said was, "If you're not working on your edge, someone else is." And I really loved it, how he just went into depth, like really went into talking about how trading is such a competitive business. And it kind of gave me a bit of a wake up. I mean, even though I am spending a few hours each day, I always feel like I can be doing more, and I should be doing more, because the ultimate goal for me is to become a better trader. There's guys who are doing this 8 hours a day plus, focusing on their trading. If I'm only doing a couple of hours at night, is that enough? So short answer is, yeah, it has crossed my mind, but I also think the podcast is hugely beneficial to myself. And also, going off what many listeners have told me, also think it's beneficial to many other people, which I really like. So, I mean, I don't think I'm doing it just for selfish reasons. Yeah, and I mean, like I said, I'm going to be bringing a couple people on next year to help out, just take the workload off my hands. Not entirely, but more hands make light work, as they say.
When you first answered, when I said, you're worried that it's hindering the ability to become the trader, and you said yes, I got choked. I was like, wait, so is this the end of the podcast? It's like, all right, guys, that's it. Thanks so much for listening to Chat with Traders. Last episode, we're gone, we're out. We got to go get working on our edge because, if not, someone else will be. I think it's such a great quote from Dante. Like, oh my goodness. And that freaked me out the first time I heard it because it really is true. It's like, while you're watching a football game, someone else is learning how to code in Python.
Mm-hmm.
That's probably the truth. So stop messing about. Like, you've got better things to be doing.
Yeah, I almost want to get that printed out and stick it on my wall.
Yeah.
I think it's a brilliant quote. That's definitely one of those points that's stuck in the back of my mind. So yeah, I wouldn't have heard that if it wasn't for the podcast, So there's so many benefits to doing it.
And especially some of these perfect little quotable moments, writing them down in your own handwriting or printing them out. Putting them on your wall next to you. I know this is kind of a common traderism. This is a thing that we all do. I remember when I was in college, I would write, never forget to sell this if it breaks below so-and-so, and put it on my monitor and start screaming about something. My buddy would come in the room and he'd look at the post notes and he'd pick one of them off and he'd hand it to me and he'd go, well, it's your handwriting. Like, you wrote this and now you're complaining about it. And you should maybe listen to this guy who wrote this post-it note that is in your handwriting. You know what I'm saying, dude? Kind of pointing out to me like, hey, listen, no one else is in control of this. You're the one who not only fails, but sees the success. All you have to do is take it.
Absolutely. And I think that's something I'll just add in there is one of the things I've kind of been aware of, but it's just kind of really become more obvious, is that in trading, no one's there to tell you what to do. Like, it's completely you and the market. It's not like, okay, so if you're running a business, you've got clients, like you have deadlines, you need to get things to people before certain times. When you're trading, it's just you and the market, and no one's there to tell you to put in the time to, to tell you what you should and shouldn't be doing. You need to really take responsibility.
You're only accountable to the math and the markets. You're not accountable to anyone else. There's no driver of what to do next.
Absolutely. And that's become sort of really obvious to me this year. And I think, I think one of the good things to be is just really mindful about and honest with yourself. Like, are you putting in the time? Are you doing what you can be to, reach your goals and reach the level of trading that you want to be at? Like, if you're not, then you need to, take a step back and think about, well, how can I change things? What should I be doing?
That's another interesting point. It's okay to be not serious about trading. It's okay if you're not trying to learn how to trade right now, or you don't have the time, you don't have the capital, you don't have the patience, not the right life arrangement scenario. You know what I mean? It's okay if you're not serious about trading. It's okay if you're serious about trading. You know what's not okay? Is telling people you're serious about trading and not being serious about it. Now, we're kind of preaching to the choir, right? If you're listening to this podcast, odds are you're doing the hard work. You're seeking out, further education on these subjects. You're probably doing the right thing. But there are plenty of people out there who claim to be putting in the effort and the time, and they're really not. They're just kind of fluffing themselves up.
Yeah.
And like we said, you want to be able to look at your report with your head held high. You want to be able to say, I gave it my all. I did absolutely everything that I possibly could. This is a point I was going to make later, but it kind of comes up right now. It's like there are two universes from this day, from this point forward. One in which you do whatever it takes to become a successful trader, whether that's weeks or months or years from now. And then the other universe where trading so tough, it's a young man's game, Glenn Gross reference. But people kind of complain and commiserate and I'll get around to it. Maybe I'll learn risk management, but what about this indicator? They get easily distracted and pulled to the next thing. They never really take stock of where they are or where they want to be. The two universes, it's the same universe, but in one you succeed and in the other you're always remembering what it would have felt like if maybe you had tried to succeed. just once. You can choose which universe you live in. It doesn't matter if you're 16 or 60. You know, you get to choose which world you go forth in. Easy to, you know what I'm saying? It's easy to get psyched up and say it. It's a little harder to actually put it in practice. I feel like that's what trading is all about, though. It's like the repetitive, it's the consistency. It's not about getting psyched up one day, having a good Monday trading, and then screwing up Tuesday, Wednesday, Thursday, Friday. It's about every single day for the next 20, 30, 50, whatever years of your trading career. And that's why you have to plan for that longevity.
For sure, for sure.
So tell me, I mean, this is the question that I know everybody asks me if I know, like I've got some secret information about which are your favorite episodes, but are there any interviews that have resonated with you particularly? Are there highlights, kind of memorable takeaways, episodes 25 to 49?
Yeah, I mean, that's another question that came up quite a lot. And, you know, I totally understand why people are asking that. It's a good question. And I mean, this is obviously fresh in my mind, but the interview with Haim Bodek last week was, I was pretty stoked with that interview. I mean, pretty stoked just to get him on the show. Just his whole story is so fascinating, and just like his level of understanding on the market microstructure is just probably unfathomable for most of us.
It's like having Julian Assange on your program, you know, or Edward Snowden. It's like literally at that level, guys. I hope you realize how big Haim Bodek is. He's awesome. Yeah,
like just the magnitude of what he did, you know what I mean? Just the whole story was really cool to be able to speak with him and get it on the podcast. And I also liked how he spoke about payment for order flow, because I mean, that's just something I was unaware of. Like, I'll put my hands up and say I knew nothing about that. And I think probably many people listening were unaware of that as well. So that was a really interesting topic. You know, just another one of the benefits of doing the podcast. Yeah, and then obviously I've mentioned Tom Dante reinforcing how competitive trading is. And one of the things he also mentioned, which I found really interesting, was learning from your mistakes quickly. Not just learning from your mistakes, but learning from them quickly. That's another one of the things that's just stuck in the back of my mind. I think you're going to be able to say this in a much more poetic way than I can, Zach, but if you are continually doing average things, right? You're just continually getting average results. And maybe if it's not even in trading, maybe like, you know, just in life, you begin to accept that, whether on a subconscious level. I don't know. I mean, I don't know enough about this type of thing. It's just kind of what I'm almost seeing here. Is if you become used to poor results, it's harder for you to actually progress and move forward like you want to. I don't know, did that make sense?
Well, it's not only, you know what I think it is? It's the accepting of the results. If you look at poor results and go, that's not me, I'm better than that. I can do, like, you're fighting the kind of malaise, the kind of the complacency. I picture it as like molasses, or like, you know, sluggishness. That's what I'm visualizing here. This idea of like, well, but this is all I am. I'm just a suffering trader. This is that victimization loop of like, but the market makers, they know where my stops are. They're always going to know. It's like, well, come on, man. You know, you gotta be not okay failing. You gotta fight back. Get up off the mat and at least throw a punch. You know you're gonna get knocked down again. Being unwilling to accept them is the important part. And I like that, becoming used to poor results. You know, you're just...
Yeah, like you just kind of accept them, and it's not okay. You've got to be, again, it just comes to that thing. It comes back to that thing, being very mindful of where you're at and...
being self-aware.
Yeah, self-aware.
Yeah, exactly.
That's it. So also Jack Schwager was phenomenal to have him on the podcast. Obviously learned a lot from him. Very well spoken, incredibly insightful for obvious reasons.
I was going to say, if he wasn't, he would be a super big letdown, wouldn't he be? It's like Jack Schwager saying nothing. No, he was great. It was a fantastic interview.
And that was, he actually told me afterwards that's the longest interview he's ever done, which was pretty cool.
Goodness.
Pretty, you know, I'll take that.
Yeah.
Peter Brandt, he was another really great interview. One of the things I really took away from from speaking with Peter is, I don't want to say, I don't know if simplicity is the right word, but I just love how the type of setups he trades, they're very, I don't know if simple is the right word, but I mean, they're just horizontal support and resistance, trading a longer time frame. And obviously it's just worked out very well for him. I learned a lot from his insight, also about risk management, you know, that it's okay to take small positions. You don't have to swing for the fences every trade. And that's why he's continued to stay in the game for, I don't know, 45 years, which is incredible.
Yeah, that's quite a trading record. You know what word kind of comes to mind when I think about Peter Brandt? It's almost like elemental. Like we're dealing with like elements of nature. We're dealing with the building blocks of the world around us when we talk about his trading style. And I think that's why it's so successful. It's not a bunch of bells and whistles and this, you know, particular little indicator and this tweak and this particular setup. He's trading from one place on the chart to the next. I think he's reduced it, or distilled it, I should say, rather than reduced. Here I am, a novice trader in my, when I compare to Peter Brandt, talking about how he's like reduced his trading. He's distilled his trading down to the essential elements. And I mean, I think you were going to say something to this effect, that kind of, all the great traders you've interviewed and what you hope to bring your own game is that clarity of vision for oneself and one's trading. Like, you must know who you are, know what you're good at, and know what you suck at. Like, if you want to feel good, focus on what you're good at and good at alone, right? And that's all. You want to get better, you got to know every aspect of yourself. You have to know every angle, your best side and your worst side.
Yeah, definitely. And I mean, another great takeaway that just comes to mind from the interviews since we last, since episode 25, Dan Shapiro, he was really cool, a lot of high energy, obviously, and yeah, just really dug into the emotional side of things, which I think was good for a lot of listeners. I mean, that's something I hear quite often. Obviously, I speak with many listeners through emails, Twitter, etc. Psychology side seems to be, quite challenging for many. That's definitely one to check out if you haven't. And another thing he said, which I quite liked, and obviously I'm paraphrasing here. He said, like, he kind of took a step back and looked at a chart and thought, where can I consistently make $100 from this chart? And I really like that point. I mean, I don't know if that's going to resonate with everyone, but just looking at a chart and seeing if there's something that comes up, something that repeats, that you can act on and you can take out just a small chunk. That's something also Linda Raschke spoke about, is just taking a trade and just taking out a small chunk of a move and just taking it onto the next one, do it again.
Well, it's trendy to think about repeatable events rather than a one-off. Like, everybody likes to talk about KBIO, the massive short squeeze, kind of takeover, reverse merger, blah, 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 from the last couple of weeks. Everybody likes thinking about those giant percentage moves. They happen extremely rarely. Why would you look at a chart and observe that one event and focus in on that? That's like, instead of observing that the sun is out, you pay attention to the one day there's an eclipse. You talk about how dark the sun is. It's like, no. You're focused on the wrong part of all of this. Like, look at the other 364 days out of this year. You know what I mean? Where there's no eclipse.
Yeah.
You have to see the chart for what it is. You have to see opportunity in a consistent sense instead of just this one particular crazy event that traders kind of habitually focus on. And why not? They're exciting. They're kind of a marquee event, right? There's something that everybody's paying attention to. I think this is why momentum trading is so highly sought after. It's exciting. It's sexy, right? You're trading where there's big movement. I understand it. That doesn't mean it's reliable or it's the best,
Yeah, that's a great point.
So I cheated. I was saying, I guess one of the points that I think you're going to be answering this next question with, what are some of the commonalities between many of the traders, and particularly the great traders that you've interviewed?
Yeah, so like you mentioned, obviously they are very clear on who they are. They know what they do, and they know what they do trade, and they know what they don't trade. So I think that's important, is being able to answer that for yourself and accept what you are going to trade and what you're not going to trade. That's something I've definitely taken on board. And I mean, we're speaking kind of like similarities here. So another thing I think is a similarity between many of the traders I've interviewed is they haven't succeeded by chance. So it's not like they got to their level of success and made the profits they did by a fluke. It was, it really came down to their incredible work ethic. I think that's definitely one of the big commonalities between everyone I've interviewed, and a lot of them took years to get there. I haven't done a tally, but many traders who I've interviewed have said that they took 4 or 5 years before they started to see some consistency. And many of the traders I've interviewed have obviously been trading a lot longer than that. So just understanding and accepting that it's going to take time.
You have to just stay alive for the first few years.
Yeah.
That's really all it is. It's not about thriving. It's just not dying as a trader.
Mm-hmm. Yeah. So that's definitely a big one. They haven't got to where they are now as a fluke. It comes down to their work ethic. That's what I strongly believe.
So how are you applying kind of like what you're learning to your own trading and your methodology?
Yeah, again, this is another question that came up quite often. So it's a tricky one to answer, actually, because it's not like I'm applying everything I'm learning in like a systematic process of absorbing their knowledge. But like I mentioned, certain things just subconsciously stick in your mind and they stay around. I think just overall, it's just given me a deeper understanding of the landscape of trading, and it's going to pay off in the long run. Like there's just no way possible it's made me, I'm worse off for doing this. Some things that I've heard have given me extra conviction that I am doing the right thing, which has been nice. But it's also, there has been a couple moments where I could have easily been distracted by, the shiny ball syndrome, but that's something I've always been very conscious of. So even if I don't trade, I think I've mentioned this already, directly like some of the guys I've interviewed, obviously that'd be very tricky. There's always things you can take away and learn and just keep in mind.
You know what it is, man? It's that everybody thinks that there's like a secret conversation that happens between you and the guest, like shortly after you wrap up the interview, where you're like, "Hey, so Peter Brandt, like just tell me, man, like what do I set my RSI to? Can you just tell me like what length moving average?" And Peter's like, "Oh yes, you just have to use this and this." And he gives you the like inside scoop. So people want to know, like, where do you get your hot tips from?
Yeah.
Totally.
And I think it's important that I say this, and I don't want to be a dick about it, but like everyone who's listening has the same insight that I do. So we're both hearing like the same things. I just want to express that to make sure that people aren't just listening; they're actually listening and really sort of absorbing the content, taking on the wisdom that many of these traders are sharing. Because it's easy to do that. It's easy just to listen and not act on it. Like, what's that saying? Knowledge is useless without action. I don't know, paraphrasing. Something along those lines.
So tell me, what were your beliefs and expectations about trading, like before you got started in trading compared to now? I always think that's funny to ask people, like, when you were not a trader, what did you think about trading? That the minute you got in here, you're like, oh my God, I was totally wrong about all this. Is there anything that's dramatically changed compared to when you started?
Yeah, I think when I first started, I definitely did think it was going to be a lot easier than it is. 100% I thought that. I thought, if I just read these few textbooks, I should be good in 6 months and I'll, be making substantial money. But that's what I thought. And I remember thinking that traders just must laugh at the rest of the world because they just earn so much money. And I still think that probably is the case for many, but it takes a long time to get to that point. So it's definitely a lot harder than I thought. And I also realized that there are many ways to succeed. I mean, I know we've all heard this before, but that's one of the things that I understand is, I mean, obviously I was introduced to trading with a specific style and a specific methodology. But, you know, I've since learned that there's just many, many ways to succeed and to make money in markets. And it's also your background is irrelevant, I feel, meaning like your level of education. I don't think that's, because I mean, many people use that as an excuse, like, oh, I don't know this, I don't know that.
Yeah, well, I never took a class in finance, so who am I qualified to? I know what you mean. Yep.
Yeah, so I think people's background is irrelevant. It's, what do they say? It's about where you go, not where you come from. So,
well, this thing that trading is a meritocratic thing. It doesn't matter who you are, what car you drive, how tall you are, how good looking you are, who your dad was. Nobody gives a shit. It matters about your next trades. It's not even about the trades you have taken. There's the saying of you're only as good as your next trade. Not even the trade you're currently in, but the next trade. Because a man who can't find another trade and who can't manage that future position, that's a person who's done trading.
Yeah.
You know what I'm saying?
Yeah.
It's an ongoing process. If you make it anything less, if you make it a one-off process, so to all you guys out there who have all of your account in some shitty little pharmaceutical letter ticker stock, you know what I mean? This one's for you guys. You got to plan on trading tomorrow too. You can't just risk it all to try and double up. It's not a strategy for success. It will work until it doesn't. And when it doesn't, of course, you're done trading.
Yeah, it's got to be sustainable. I think that's a really key word, actually. That's something I've picked up from, I think that was Mike Belfiore. I've probably mentioned this on episode 25, but that's a really key word, I think, to trading success, is have an approach that's sustainable. But I mean, another thing that's changed, or I've come to believe about trading, is that things can be as complex or as simple as you want to make them. And a lot of people say keep it simple, and that's probably a fair thing to say, but I mean, I've come to realize that some people actually thrive off complexity, and I don't think that's a bad thing. I think that's okay. But I mean, it just goes to show that it's, you know, you can make this fit you. So it can be as complex as you want to make it, or it can be as simple as you want to make it. That's another thing I've come to realize.
I think it's the difference between inductive and deductive learners. Inductive learners tend to get 80% of the material, in 20% of the time. And then there's the deductive people who will get 100% of the material, but maybe in 100% of the time. They're going to take longer, but they'll get full completion, right? That's just two different learning styles. That's not to say one is better. One might be faster, one might be more holistic. I mean, it just depends. And it's not to say that one really is superior in the market. I've seen successful traders of both types.
Yeah. So let me throw this back to you, Zach. What beliefs did you have, and what expectations did you have about trading before getting started?
Oh my God, I'm thinking back to, all right, this is really embarrassing, guys. I used to chart like channels on Google Finance charts. I remember I'd be in class and I'd pull up a ticker on like Google Finance. This is back in like 2007, 2008. And this is before I had Thinkorswim even. And I thought it was going to be so easy as to define two trend lines and just buy every time it hits that lower trend line and sell it at the peak. Like, I was measuring out how much money I was going to be making if I was trading 2 or 3 or 500 shares. Like, I was counting my money. Like, I had planned to make this with absolutely, no deviation, no wrinkle in the fabric. And you start trading live and you say, well, what do you mean I didn't get filled? Wait, what do you mean commissions are? Oh, what do you mean I just clicked that button too many times and now I have to pay extra? It's just, you start appreciating more of the friction, the loss to entropy, just the kind of the energy loss, and therefore profitability loss in trading that you don't account for. You think it's going to be so easy, as you say, I mean, I remember thinking that the markets were going to be stable. You have to remember, I learned about the markets in 2007 when things were going perfectly fine. There was just the first inklings of some systemic crisis. What does that mean? Systemic? You mean it hurts the whole system? How could the banks be interwoven? I mean, nobody knew what subprime was, credit default swaps, etc. All these derivatives. I think the markets kind of were a fierce reality check for everyone around that time, that they are violent, that they are uncaring. They're like nature. You know, they'll burn you or freeze you or blow you off a cliff, and they don't care because you're just another animal on this planet. You know, this goes back to that idea of like elemental. When you're dealing with the elements, they can be friendly, be quite indifferent, quite scary. We have to have respect for them. I guess I kind of had that arrogance of, you know, we as humans will control the elements around us, you know, man versus nature. What if it's man versus financial markets nature? Oftentimes in trading, it's not you versus them, it's you versus you. That's a concept I know a lot of people have said before, but that's what makes for such an evenly matched battle. That's why trading is so hard. You are always fighting your next limitation. You're always struggling to take the leap to the next lily pad, the next stepping stone, without being able to see it sometimes. It's a great quote. Sometimes you just have to take the leap and build your wings on the way down. And of course, that's a very ominous quote if you're not building your wings. I mean, that goes back to the two universes. If you're working in that first universe where you're working hard to be a great trader, you're pretty confident, I'm going to sprout wings any minute now. If not, you don't have much faith. You're just sort of biding your time until you hit the ground. And that kind of grim reality, of course, no trader wants to hear. This goes back to like why trading education is such a marketing-driven kind of industry. People want to be enticed. They want to be encouraged. They want to be uplifted. They don't want the reality check. They don't want the kind of the grim information about risk management. They want the sexy. They want the exciting. And there's definitely something to be said for being engaging, being entertaining and relatable. But there's also something to be said for like teaching people survival skills. You know what I mean? It's like being a survival instructor and trying to just show people, I don't know, pictures of hot girls in outdoor clothes or something. I don't know, you know, hunting clothes or whatever. It's not going to do them very much good when they're freezing to death and they forgot how to build a shelter. You know.
I think this might be a good time to say a quote. Which how's that go?
Yeah, absolutely. Everything that we've been taught up until this point has been to make us feel better than it could ever make us trade. We're given all these tools that make us feel important and on the pulse of the market. You know, it's almost like we're in our own Fidelity commercial of like, aren't you a modern trader on top of, you know, the fast moving financial markets? Well, you and your analytics is this cheesy kind of like, you know, get psyched, Mr. Trader, because you're going to be powerful one day. Truth is, it's like the little speak and say stroller you give to a toddler to make them feel like they're interacting with the world around them, and really it's just keeping them busy. The same thing with our indicators, our, you know, crappy little beginner technical analysis. It's unfair. Because I think there are people who are really putting in hard work, trying to learn the more, like you're saying, some people thrive on complexity or they seek it out. Those who are looking for the more sophisticated pieces of technical analysis, like they deserve access to it. Quick little plug. That's why I'm so adamant about teaching the institutional trading strategy of volume weighted average price at thevweb.com. I'm just kidding. No, it's so important that traders realize what we're given is to occupy us, to kind of, I don't say waylay us, but, you know, to kind of hold us back, to just to occupy us. I think is the best way to you know, fill our time, to pass the time, to bide our time. That's really what it is. And it's insulting when you realize that, because we deserve better. We're the same people as, I don't want to say Peter Brandt, because he is such a legend. It's not like all of us are Peter Brandt, but we're all human beings. So is Peter Brandt. What's to say, you know, when he started out, he didn't doubt himself. I bet you if you asked every trader, did you ever doubt yourself? Anybody who tells you that they always believe, straight up lying, you know. I think we talked about this in my first interview, the kind of poisonous self-talk that traders go through when you're really down on yourself. Like, why do you think it cuts right to your core when you know what to say to push your own buttons? It's because you are you. You know your weakness. You know what you're the most ashamed of in your trading. You know what you are so bad at that you don't even want to tell your other trading friends about. You know what you do. You don't have to tell me. You don't have to tell Aaron. You don't have to tell us. That's fine. But admit it to yourself. Start being honest with yourself so that you have more, I want to say like self-credibility, like self-esteem, self-value, worth. So that you start trusting your intuition. So that you say, you know, I'm pretty self-aware of this. Like, I know if I'm going to screw this up. I'm not screwing this up. This is a good trading approach. And it's okay if I go through a drawdown. Because this isn't me. This is the approach that I'm taking. It allows you kind of shield or deflect a bit of the burden, the ego blame that we all put upon ourselves. And if we're not careful, like you were saying, you're not accountable to anyone. Well, you're also not protected or bolstered, kind of emboldened by anyone else. You know, in a normal like business, in a partnership, you have partners who are going to say, oh, you're having a bad day? Well, tough shit. We got work to do, buddy. Let's go. And psych you back up. Many traders like really don't have that. That's something that a lot of traders who reached out to me from the offering from episode 11 have said, I don't know any other traders. Where am I going to meet them? Right? On a forum online at like a meetup group? Like that's ridiculous. Would traders succeed without a kind of social element? I don't really know. Like if you're weird thought experiment, right? If you locked a trader in a room, you gave them enough food and water and air, of course, but like they had enough time and money, I guess. You gotta give them enough of everything, right? But would they be able to really succeed in trading if they had all the trading books, maybe all of Chat with Traders podcasts, if they had everything except for actually connecting with other traders and being held accountable to other traders and seeing how other traders do it? I think it is so instructive to see other traders struggling with the same things. It is cathartic to go through that. Oh my God, thank God I'm not the only guy who gets stopped out at the lows. Or, you know, buys the stock today and it goes nowhere and you forget about it tomorrow. Of course, that's the trend day. People need to see that you are doing something that is perfectly fine. It is right. It is part of the path. And it goes back to that whole like trusting of the process that we young guys get to be like, what the fuck are you talking about? Trust the process. We're too young to appreciate any process. We just see the hard work and the struggle, and we're waiting for that process to pay off. You know, I'm checking my hypothetical watch, my Rolex, right? I'm kidding, I don't have a Rolex, but looking at my watch going like, when is this process gonna pay off? When I'm 30 or 35 or 40? It's hard to trust in the process when you're early in the process. You need to connect with other traders who are going through the same thing, maybe a little further along the path. Or instead of looking up the ladder, maybe you should look a little further down the ladder. I mean, this is something we're going to be talking about, working with other developing traders who aren't at the same level as you. And this goes back to kind of how I got really passionate about trading. I moved from it just being a fun thing to do while I was looking for a job fresh out of college and into something that I could do for the rest of my life. What do they say? You know, if you love what you do, you never work a day in your life.
Yeah, that's a brilliant quote, and I really actually like that experiment you kind of suggested there. I think that'd be really interesting to find out how people would perform in that type of environment.
Who do you want to lock into a room for like 6 months? Do you have any traders who you want? We could pick a really annoying trader and just lock them away for 6 months and not have to talk to them. If you volunteer me for this experiment, I'm going to be pissed, Aaron. No, I'm just kidding.
No, I'm thinking some of the Twitter trolls.
Yeah, exactly. We'll just lock them in a room with each other, and yeah,
and they can prove themselves there.
That's too funny.
So let's change this up a little bit, because we got a lot of questions coming in that listeners want the answer to from you. So I've got a big long list here. I mean, we've already over an hour into it. I think this is going to be a long episode. So
I think so too. But did you want to? I'm sorry to interrupt. Do you mind if I get one more question in before we move on to my topic?
Yeah, sure.
You speak with so many of your listeners too, and I gotta applaud you for that. Because like, look, I thought I talked to a lot of traders. Guys, trust me. You think I have it bad? Aaron, I love that you guys reach out to him. I know Aaron does too. He doesn't want you to stop or anything, but it's great that you get to connect with so many of the people who say, I'm sure, overwhelmingly positive things about the podcast. Are there any like common struggles? This is maybe that cathartic moment to like show people what everybody experiences. You know?
Yeah, so that's a good question. Some of the things that tend to come up quite often in the emails I receive, which is awesome. I love hearing from all the listeners in that, so keep it up. One of the things that keeps coming up is many people think they're so close to profitability. They think like they're almost there. I don't know that I have the solution for that, but that's definitely a common theme. People think they're very close, they've almost made it, they've almost got consistency, but they don't. Not yet, they don't. Maybe you can expand on that. Like, why do people always think they're so close? Like, are they so close, or is there something missing there?
Yeah, I know what you mean. I don't think people are right. I'm sorry to give you guys the bad news. I don't think you're as close as you think. That doesn't mean you can't get there. That doesn't mean it's unattainable, but it's a lot further than you think. I mean, look at Aaron. We were just talking about this, man. 6 months ago, or whenever, right? We expected we were going to have a working algo by now, but there's a million things that come up. Life gets in the way of your best laid plans, and that's totally fine. I would say if you asked a room of 100 traders if they're good or close to profitability, 99 would tell you yes, and the one who didn't say anything is the profitable trader out of the bunch. You know what I'm saying? The people who are the most vocal are often not the best traders. Sometimes the quiet, diminutive, tiny voice, just oh yeah, I'm over here just watching the markets, no big deal. But I understand the wanting to feel, hey, I am this close, I am right there, man. And if it just, if just risk management, if I could just nail down risk management. And it's like, guys, people write books about risk management. People write multiple textbooks about risk management. People's jobs, in some cases, are to be risk managers for a firm. You know what I mean? This is not something you can just master quickly and then you'll become profitable. It's like an engine. It's a million different intricate parts all working together in the right order and the right rhythm. And that's what's really important about when we keep saying, like, find something that fits to your personality. We're saying find something that is moving to the beat of the song that you are playing, so to speak, right? I mean, you want to play something in rhythm with what you're playing. You don't want it to be a total mismatch that requires you to, let's say, wake up at a totally different, hour of the day, or trade a different style, or trade a different product. Maybe you're not you don't like trading Forex, but you have to trade Forex. I don't want to discourage people. I don't want you to think you're never going to get it. It's just be realistic with yourself about how long this is going to take. Part of this is, and I think here's what you're getting at, managing expectations. If you don't manage your expectations well, you are going to get really upset at yourself. The poisonous self-talk is going to come back. I'm sure, Aaron, you even felt that. Like, you get discouraged sometimes when you say, oh, I should be a lot further along. God, if only I had more time, if I'd spent more time on the code. This isn't your fault. Come on, you know what I mean? Like, it's fine. We're talking about a multi-decade long process, and you have to treat it like something.
Yeah, and I mean, that's something I was going to add, actually, is, interviewing Kunal. He brought this up on episode 20. He said, what is it to spend a couple years now? Just accept it's going to take a couple years. It's going to take a few years. Just really drill down and learn what you can now, because this is something you very well might be doing for the next 30 to 40 years. So I think, this is something worthwhile mentioning onto what you said there.
Yeah, you don't need to be good right now. You have to be good when you have more money. When this is a higher stakes game, when you're highly experienced and you know exactly what to be looking for, that's when you need to be good at trading. You need to keep, like a sponge, absorbing information until it's your time to strike and dump all of that information back in the market. And it's okay if that's not right now. Traders are so adamant about proving to others that they're real, that they're using real money. It's like they're so worried about being considered fake. They got to go prove it with real money. I know this is what you're going to say. They rush into real trading, right?
Yeah. And I mean, I think it ties in really well, is many people also seem to be trading knowing that they don't have an edge, like actually knowing they don't have an edge, or they're very unsure about things.
You got to fake it until you make it. They got to just get that experience. And that's what everyone says, right? You got to go really experience the markets to learn anything. And it's like, I don't know what strategy I should be trading. What am I doing? Am I just watching? Yeah.
And I mean, they kind of, it's like they almost rush into trading real money because they feel like that's what they should be doing. Even though you know, everyone knows 90 to 95% of traders fail. I mean, I don't know where that statistic came from, but I'd say it's pretty accurate. I'd lean more towards the 95%, but you know, it's a game where so many people fail, yet people just like rush into it, and I think that's probably the wrong approach.
You know, when people ask how can that be if there's a winner and a loser to every trade, well, of course, traders are not equal size, right? There are some disproportionate traders who are much larger and represent thousands and thousands, you know, many percent of the failing traders' accounts, all aggregated, are under control of the few separate solid traders. You know, that's your goal, is to be a black hole of wealth, to just absorb and kind of attract money wherever there's an opportunity. Because if you're constantly growing in both skill and in account size, who cares when you get there? You're gonna get there. You can rest easy in that and kind of act in a risk-appropriate manner, you know, confident that you will arrive eventually.
Totally. So let's roll into some of the questions that listeners contributed that they want you to answer. So I guess probably the first question is, how did you structure your study when you first started out? I think that's a good place to start, right at the beginning. So how did you first structure your study when starting out?
Well, you remember what I said about Yoda, right? He didn't begin like Yoda. He probably was just, you know, he wasn't a master when he started out. I didn't really structure my study at all because I didn't know that I needed to structure my study. I was one of those traders who thought they needed to get that real-time market experience. I was trading when I was still in college, just the last semester I was at Tufts up in Boston. And I mean, I think back to, like, I spent a lot of time on Tim Knight's website, Slope of Hope. He's awesome. Evil Speculator, another blog that I spent a lot of time on that I think they're still up and running. I really was seeking to connect with other traders, other people. And when I found chat rooms, it was a step closer to real connection. And eventually, I think I really took it to networking and connecting with traders, kind of an individual connection and study via Skype or the telephone or even just email exchange. And I think that's, you know, we're talking about the social aspect of trading before. Like, networking cannot be overstated. You absolutely must start trying to find other people with whom you can connect, even if it's just other developing traders. I think part of my trading development, really going from like an okay trader, an intermediate trader, to a more advanced trader, was counseling other traders with whom I'd interact, almost just as a peer, as a friend, like not as a trading coach.